Hello, I'm Finola Burke from RaaS Research Group, and today we're focusing on Know Your People RegTech company, Kinatico, ASX ticker KYP. Joining me to discuss the company's recent Q4 FY25 trading update is CEO Michael Ivanchenko. Welcome back, Michael, and thank you for joining me.
Great to see you, Finola.
So Kinatico has reported a 15% increase in Q4 revenues, which includes a 57% increase in SaaS revenues to 4.4 million. How much of that growth is coming from new customers and how much from the conversion of existing customers to the SaaS platform?
The net result of that raise, Finola, is actually new customers, but they're the new customers we primarily announced in Q2 and Q3. I remember discussing it then, the lag effect that we have with the platform, that when we announce, we don't immediately see the revenue coming through. Well, we're now seeing the effect of that revenue coming through, and it really underpins the value of signing up SaaS customers. So net effect is they're new customers, but new customers that were signed a few months ago.
And transactional revenues have been steady for the past 3 quarters, which has surprised us. What's at play here?
Yeah, it's actually surprised us a bit too. We're still very much of the view that the transactional or screening business is a commoditized, declining business. But at the same time, there's been some interesting market dynamics that have underpinned it. One of which was the Australian legislation late last year requiring Australian storage of any PI or private information for Australian customers. But also our win of New South Wales Treasury and the recognition that gave us within that type of winning those type of government contracts has put a bit of those two things have put a bit of an underpin for us in that declining market. So when you consider that that market is still declining, we've actually outperformed it further than just increasing the revenue.
And on a 4 year basis, SaaS customers contributed 46% of total revenue to 14.9 million, and total revenue was up 12% to 32.1 million, which was a record for the company. Are you happy with the growth momentum in SaaS revenues? And is its share of total revenue meeting your own targets?
It is. I mean, our objective has always been to get to 80% of our revenue being SaaS. We're always going to maintain the CV Check product in market. It's a very good sales acquisition tool for the SaaS business. But the strategic target for the business is very much around the SaaS product being the compliance product, or compliance simplification of compliance. And the growth trajectory we've seen has continued, and we see no reason why that won't continue in the short to medium term before we even consider the acceleration that we are looking for with the launch of the new platform.
That's a nice segue. We have invested 3.5 million in Compliance X in FY25. Do you anticipate further significant investment in that platform?
As a software company, we always need to stay ahead of the curve and stay ahead of the competition. So there's always going to be investment, but that is our high water mark. This year we've done all, and the previous year, putting all the foundation in place, putting all of the heavy lifting in place means what we're doing moving forward is about enhancing and extending that product. So with the investment that we've done this year, we will continue to invest, but it'll be a materially lower number next year.
And you're about to go to market with the platform. Have you had clients have a bit of a sneak peek, and are they asking for any additional features?
We have had many clients having a bit of a sneak peek and a lot of interest. The platform we fundamentally complete a few months ago. We have appointed a parent as our media agency, alongside having Chantel Walker join us as Chief Marketing Officer. And that team, is very much now leading the rollout for the new platform, the plans to go out in a very, very structured, targeted go-to-market plan. All the things we've put in around that, or the recent little additions and tweaks, have come further from those customer polish. It's been lovely opportunity to have that type of feedback to really make sure or just increase our confidence about product market fit.
And you've entered the financial year, Michael, with an additional $400,000 in the bank, bringing the total cash balance to 10.2 million. And that's while investing in ComplianceX. What opportunities do you see for deploying this cash in the year ahead?
It's always on our agenda to look at how we make sure that when we're ready to accelerate to that next phase of growth, we are investing in the right places. We feel we're in a great position now that as we go to market with ComplianceX, we start getting more and more feedback on the momentum, the trajectory, and then we're in a position to start deploying some of that capital, if need be, to further accelerate it. Basically, we are always on the lookout for anything that's going to give us further market reach or acceleration, or that may be via inorganic opportunities to actually extend our market reach or product feature set. So it's nice to have options with having that cash in the bank.
And you don't feel worried that you might also be a target?
I definitely think we're a target, and our challenge is to just continue to perform. The more we perform, the more we increase the market cap of the company. If that does occur in the future, we just need to make sure it happens at the right price.
Well, thank you, Michael, for taking the time to speak with me today. I'm looking forward to catching up with you over the course of FY26 to check on Kinatico's progress.
Thanks, Finola. Always a pleasure.